Well, hello guys. I hope all is well. Sorry that I've been missing in action, MIA. I've been doing a lot of work behind the scenes and just haven't gotten around to do any kind of recaps or anything lately. But I have a few minutes, and I just took profit on a trade for about 90 pips, so that worked out pretty nicely. And just wanted to walk you guys through the process of planning the trade and analyzing it and making a case or building a case for entry. Okay, so what you don't see on this chart, and I'll mark it up a little bit more, is this high up here essentially coincides. This is the euro dollar, by the way, if you didn't know. And we had been on a pretty substantial bullish run, and was stopped, pretty quickly for some reason. Okay, and it actually ended up being that we tapped kind of a larger time frame 61.8 fib retracement. I'll show you where I got that from. And the initial pop down off of it was good for about, I actually took a trade on this as well, from capturing essentially this move here. And that was good for, I think it was about 50 pips. I'll have to, maybe 40 pips. It was just kind of a quick little trade. I just wanted to capitalize on the quick movement. But the main trade here was this, okay, and it was this idea. And again, we're bouncing off the 61.8 fib retracement, and then we start to squeeze, and you can visualize that squeeze being contained. And this is an hourly chart, mind you, but you can visualize that squeeze like so. But I also identified a potential pattern in the market where you kind of get a little impulse move, and then you get a kind of a flag pattern or a corrective structure. Now, what kind of began the mindset or the process of thinking, okay, maybe this is a corrective structure, is just the fact that this is a very strong bullish push. Okay, you can see the initial candle, boom, once we hit down here at about 1350, we popped up all the way back up to essentially 1.1390, okay, at one point, and then kind of got sucked back down. That took one candle. The next time we came down here to around 1350, we popped back up very aggressively, but it took two candles to go essentially the same distance. Well, the third time we came back down to 1.1350, look how many candles it took to cover the same, not even the same amount of ground before the bears stepped in. Okay, that's 1, 2, 3, 4, 5, 6 hours that the bears or the bulls couldn't do much with. Okay, so each time we're getting down to this area, we are getting a weaker and weaker pop off of it. Okay, so that was kind of my first clue. All right, maybe the bulls are getting squeezed out of the market. Okay, but what I mean by squeezed out of the market is this situation. Well, the market likes to fake people out and manipulate and whatnot. So mind you, we're already coming off a higher time frame structure. We push down. We're starting to potentially correct. What I was anticipating was a breakout of this squeeze pattern. Okay, you can see the squeeze like so. I'll just kind of draw it in here. Let's see here. You can see the squeeze like this. Okay, but you also can't ignore other potential structure. Okay, so the squeeze coincided with the potential flag pattern, so I was looking for one more pop up to around 1390, because that was obviously, that's not my thing, that was obviously Kind of a pretty strong zone. Sorry it's getting a little cluttered here, but I'll show you a little bit better on the other chart. Okay, so I was looking for one more pop-up off of this into this zone, essentially. That coincided with from this low here to this high, we had a pretty nice rejection of the 61.8. So I was expecting those profit targets to fill. Okay, now those profit targets coincided with not only the 61.8, you know, of the higher time frame, but also this push down 61.8. So I was expecting this little fake out, fade up into this zone, and then kind of slowly into the end of the week. This was, I believe, Thursday that I kind of planned this out. Then kind of break back down into this descending channel structure, and then probably fill the bottom here. And that's literally exactly what happened. It couldn't have been more perfect. And I had a couple of entries on this chart. One was up here as we were testing and rejecting out of my zone that I had pre-planned. And then the other entry was once we kind of broke this more immediate kind of little trend line, and we retested this up in here, I was able to scale in again and get another position. Well, I just took those profits off as we're coming down into, you know, this lower channel here. You know, I'm not going to see if we're going to, you know, I assume we're likely to fill the bottom here, but, you know, I got the move. It hit my profit targets based off of this higher time frame move. So I'm happy. Okay, you can see high to low, this high to that low, got that 61.8 fib retracement, and those profit targets are filling right now. Channel bottom is just a little bit lower. Wouldn't surprise me to see that fill. So that was the trade. It really started on the higher time frames. Okay, and if I zoom out a little bit, you can see what happened here. Okay, we come down. I gotta get this magnet off. We come down, we double bottom here, break the neckline, which kind of coincided with the range, broke out, retested deep into this range structure, and then had a big bullish move up. Okay, that big bullish move up went right to, now this is on the monthly chart, went right to a higher time frame fib. Now what I always try to do is to give myself the higher time frame structural levels. Okay, and if I'm mapping out what this market's doing, just going from where price currently was to, and just kind of work my way backwards, you can see the trend. Okay, we go, so we went up, and then this move happened, and these are all just following kind of the series of higher highs and higher lows. Okay, so as we kind of just, you can see the downtrend. Okay, now the most immediate push down, all red candles, red, 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 red. This is a monthly chart, and then we finally get the reversal candle. I wanted to see where this could potentially stop at. Now that reversal came right at the 61.8. Okay, so as we work our way down and kind of visualize where that is, you can see where it hit. Okay, we started to decelerate up into those levels, which coincided with the higher time frame 61.8 and this kind of channel structure that we were forming. All right, once we broke back in, I'll show you how I took advantage of the other trade that I took. Once we broke back in, this fib right here coincided with the 61.8 as well, right there. Okay, so I was able to take advantage of that and trade it down just to previous structure. I wasn't I wasn't looking, this was a counter trend trade, so I wasn't looking to, take the whole bank. Okay, this was actually a 3-to-1 risk to reward, or a little over 3-to-1, I believe. Right down to, I took it to 1350. 1.1350 is where my take profit order was set, and that filled just above this previous high. And you can see rejected heavily, essentially went all the way back up to my order and then kind of trickled around, and then the other trading opportunity began to unfold and manifest as new structure formed. Okay, so that's the whole process. Sorry, I got a little long-winded there, but that's what it takes. Okay, it seems like it took me a long time to explain everything, but once you get a process of how to analyze the market, it goes quick. Okay, I literally did this whole markup, with kind of the pathway in less than 2 minutes. Okay, you get your main levels, you kind of get an idea of, hey, what's the market doing, and once you get that kind of idea for yourself, then it doesn't take long to take advantage of those opportunities. Okay, I hope this helps. We're continuing to push down. Now, where is EU going from here? Well, again, this is a monthly level, so it could continue to push down into new lows, or we could just be having a minor corrective phase here, or a complete reversal. We're kind of in an uptrend here right now, so we're just going to have to see where price goes from here. All right, now it's coming down again into some confluence, and we'll just kind of clear everything off here to just start fresh, okay? Because that's what I like to do all the time, all right? And if we just start off on the daily chart, then we can see what's happening. We're having an aggressive move down, or aggressive correction. So there's a chance that this channel structure, is going to get filled. There's a chance, okay? But there's also a chance that maybe, if we fib this to there, we're tagging the 50% right now. Remember what we were coming off of. Those higher time frame profit targets are right there. Okay, 50% higher time frame profit targets, or 4-hour most recent bearish trend profit targets, even number, psychological number. Okay, channel bottom, if you were to draw that back in there, on the 4-hour chart, you can see it a little bit better. That's all a decent area of reversal, in my opinion. Is that the bottom for the week? Are we going to continue the uptrend and push up to some of these profit targets up there? Don't know. At this point, again, I can see potentially a continuation down. Maybe we come down here and fill this, do something like that, and then start to kind of work our way up again, before we rally up. Okay, or we can just kind of, that's the bottom, maybe double bottom there, and then slowly break out, come back, and then just slowly work our way up to profit targets there. Okay, but I'm not in the guessing game, so I have no idea if this is going to be the reversal point right here or not, or if we're going to drift lower and maybe kind of do something similar to this, and just kind of slowly correct down and squeeze and then pop out and push up. I don't know. There's so many different possibilities, but first and foremost, what I want you to get across is it starts with the plan. Okay, exactly what I'm doing here, it's a plan. you know, but it starts with that planning process. Okay, so I just wanted you to see that. And then again, bearish scenarios, who knows? Maybe again we drift down like so, come back up, I don't know, retest, and then bam, and then break down. Okay, there's so many different opportunities, and at any given time you can make a case for a long or short entry. Okay, the only reason your orders ever get filled are because someone's on the opposite side taking the opposite position. Okay, whether they're taking profits or looking to enter long when you're looking to enter short, type of thing. Okay, so that's the only reason your orders are getting filled. Okay, so I hope this helps. I hope this thinking process or analysis process helps you guys. Keep at it. I mean, I work with a lot of guys, and it's hard for them to grasp it in detail at times. And all I can say is stay strong, guard your hearts, guard your minds from getting egotistical in the markets, because as soon as you kind of start thinking what the market's going to do, that's when the market's going to slap you, and it's not going to feel good. Okay, so don't be in the guessing game. Don't get into the mindset of, hey, the market has to do this or the market will do that. The market does what it wants when it wants. Okay, all our job is to go into the markets, not even looking for trading opportunities, but looking to do good analysis. Okay, that's all we can do. It's all anyone can do in the markets. Okay, any professional trader doesn't necessarily go in. Of course, they want to make money, and that's the whole goal at the end of the day of trading, is to make money. But I think by and large, the vast majority of professional traders don't necessarily go into the markets day in and day out looking to trade. They go into the market looking to do good analysis, and those trading opportunities present themselves. Okay, the way you do your analysis consistently, day in and day out, over and over and over and over again, is what is going to do that consistent execution. Give you that consistent analysis and that consistent execution, which is going to lead to eventually consistent results, good or bad, depending on how good you are at your analysis. But if you do it the same way, day in and day out, get a directional bias maybe, or make a plan. Okay, you don't even have to. There's nothing wrong with counter trend trading or trend trading or range trading. Okay, there's no right or wrong way to trade. Okay, some people say, oh, you're trading against the trend, you're never gonna make money. You're day trading, that's not sustainable. Those people are narrow-minded. Okay, I'm the type of person who has witnessed so many different methods of profiting from the market consistently. So for me to say that, oh, you're a day trader, that's not going to work, or you're swing trading, most people don't have the emotions to sit through the ebbs and flows of the market, or sit on their hands for those proper setups. That's not going to work for the vast majority of people. We can't go into the market with that mindset. We need to be open-minded and accepting of everyone and everything. Okay, because there's no right or wrong way to analyze the market. The only thing that there is, the only right way, I should say, is to do, again, that consistent analysis, whatever the case may be, whether it's Elliott wave or simply just using support and resistance or Fibonacci or trend lines. Do that consistent analysis over and over and over again. That's going to lead to consistent execution of your trades because you have a plan, and that's going to lead to the consistent results over time. Take care, guys.